Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's January 6th. This will be our chart lesson for the day. You'll notice there's something new on here. You see the blue lines. Another trader sent me this indicator. It's a custom indicator, but basically what it does is it highlights the 8:30 open, and I have it set for 2 p.m., which is my cutoff time for trading. I think you can adjust it to have to skip the lunch hour or any other period, and I think it'll actually give you 3 periods in here. I haven't played with it around much. I just put it on here and put it from 8:30 to 2 and left it at that. That's generally our trading time. I actually start trading at 7, but I'm going to start it at 8:30 and shut it off at 2. And that gives you our regular trading hours. And you can see this line is the open from yesterday or last night. This from this line over to the blue is the overnight trading, and from the blue line over here, this is all overnight trading. You can see we were having another big sell-off this evening as well. Um, Notice that failed second entry long, and then look at that big move down. That would have been a nice trade. Um, but it is a nice indicator. I like it. It keeps me from having to look to try to figure out where the opening bar was or where the 2 p.m. is. I can just glance and you can see it. Another thing he shared with me that's fairly interesting is an indicator that gives you your risk on the bars and so forth. So if you point at the signal bar and you click down, you can see the range. That's a 9-tick bar, and it also gives you the risk amount. So you'd be risking $150 if you went long on that bar. And we always go long on 1 tick. And I'm not sure, I hadn't done the math. I'm not sure if that includes the extra tick that your stop goes 1 tick below, and the actual range value, the bar is actually 5 ticks, and that is correct, or 9 ticks, I'm sorry. It's a 9-tick bar. Let me just verify that. $70.50 to $72.75. So that's yeah, that's actually 9 ticks. So that's correct. So and then the risk amount looks like he actually adds the putting your stop 2 ticks below the bar. I believe that's right. I'll have to verify that with him or do the math. I'm not going to sit here and do it in my head real quick, but it looks like he adds the additional 2 ticks for putting the stop 2 ticks below and entering 1 tick above, and you'd reverse that if you were coming down. So neat little indicator there, just so you can glance at it real quick and see what your risk is. That's really neat. I like it. And so that's what those new things are, and I thought I would share those. I will actually put those in on our website at some point, so any of our members will be able to download that. But let's get on to the chart lesson. I've already spent about 4 or 5 minutes here, and we haven't talked about the trades. It was a really good trading day. For the most part, we spent the trading day in a trading range from the 8:30 to even the close today at 3:15 or whatever is pretty much a trading range from about 1970 up to about 1991 or 92, in that range. We spent the most of the day in that range. That's a 20-point range, so it's a fairly large range. And really, you were better off to use these shorter term trends to figure it out, because they all worked out nicely. Notice this one's going up, we get a break, a new high, then you got one coming down, a break, a new low. This one, we're going up, we get a break, and we can't make a new high. So that's the only one that really didn't give you a great setup. And it may be that I just don't have it drawn quite. It might be just a little steeper here, like so. Just see how that fits. That's how I had it drawn earlier. And it still fits that way. So maybe that's it, but I'm going to leave it the way I had it. You still get what you need here. Notice that you get a failed second entry long. You don't want to go short right there. That's too much congestion. It's too close to that low. Let me back out just a little. But we'll talk about this when we get to it. But we didn't make a new high on this one. But notice this one coming down. We get a break, a new low. This one we're coming up. You get a break, a new high, and then we sold off. So they pretty much all worked out. And even the one that didn't, you shouldn't get tricked on this one. It should be pretty, fairly straightforward. So let's back out a little bit further and talk about the trades. We had this nice two-tier channel coming down, had a break and a new low, and then we got, this is not a perfect reversal pattern, but notice we had this little failure to go lower, and then you get a failed second entry short here that reverses. And so I like that for a long. It was an easy scalp, but it comes back and you don't get a runner on this one. But it makes a double bottom here and gives you another chance to enter. And if you drew this line right across these highs here and drag it down to here, it bounces right off that. But regardless, it's a double bottom and you get that one little tick that breaks further. So I like that one. That trade right there was a really good trade. Then it pulls back, it confirms your trend line, gives you your third touch. This is just a first entry though. But let me show you this. This is a little congestion area. You can see that. So this is like a failed break lower out of that little congestion area. And that gives you that with the fact that it's confirms your trend line and it bounces right off your trend line. That's enough to give you a reason to go long there. I still left it green, but it's borderline. It could almost be blue, but I left it green just because we'd had such a big sell-off here, and you got to be really careful about getting long, trying to get married to the longs here. But this turns out to be a really nice trade, and if you caught this one, you got runners out of it too. And that's the thing about it. Somebody asked me yesterday about the runners. I talked about it shortly. Generally, you get more runners when you're more aggressive. When you take the more conservative, easy trades, you don't have as many losses, but you don't get as many runners either because they're easier to see and more traders recognize them and different reasons. But when you're a little bit more aggressive, especially if you recognize the reversal type deals and the traps, generally anytime you've got a range and you get a failed break out of it, especially when you trade it up into that range, that's when a lot of times, if you're aggressive and take that failed break either way, that's when you get the big runners. And sometimes you can catch the low of the day or the high of the day and get some huge moves out of those. So notice right here, that's kind of what happened here. There's a little double bottom and you get that little one tick trap and it took off. And notice you would have caught runners there. They do come back and get them here. There's that pullback again that we talked about yesterday. But now you get a failed breakout, another chance to enter, and look, and this time you catch a runner on it. But even if not, notice here you get a little more conservative. You get the two legs back to the EMA, the trend line. It bounces. Look at that big bullish bar right off the trend line. Let's look at this one. That's a $150 risk. That's a little bit more than your eight ticks. It's 9 ticks, and by the time you use your stop and put your stop, you're going to be 10 or 11 ticks. So, but I generally don't worry about that too much. You gotta when you're new to this and you're new going live and you're not real consistent yet, you got to stick to that rule. But I don't pay too much attention to it, to be honest with you. Once you get to reading the price action, put your stop where it goes, enter where you're supposed to. But notice what else here on this one. You You could have easily let it break higher and dropped a limit order back in here, and you would have still caught it. Notice how it breaks up and then pulls back, um, and then it even comes back here and fills it and takes off again. So there's a couple different, you can use that limit order. Sometimes you'll miss the best trades. If you tried to use the limit order here, you got left behind. So, there's pros and cons to being conservative and being aggressive, but early on, I do highly recommend being conservative. And then notice you get another pullback. This is a breakout pullback long. It's another attempt to go lower. It's a little bit higher low, bounces right off the trend line. This one's is almost borderline green, but this is a pretty strong move up. This is a confirmed trend line. This is another bounce off of. It's not the most bullish bar. It's closer to neutral than it really is bullish, but it has a little bullish slant because it closed in the upper part, not dead center or whatever. So I kind of call it a little bit neutral / bullish, and it's a nice move. But then we get two legs back. We got a break here, and we were below the EMA. So even though that's a second entry long, I don't like that doji in that case, and that closed dead center. So that's a 1-bar trading range. Just sit tight and see if you get a little better opportunity. Even if you did enter it there, it still would have worked, but I think you're better off to wait. And then guess what? You get a failed second entry short right here, and a chance to go long right there, and this thing really takes off. And if you caught this trade, a runner would have been safe, and you can ride this all the way up. This is where I would have exited when it made that little double top right there. I'd exit right there, but that's several points right there. And if you just caught that one trade today, and that one was easy to spot, it actually was triggering just as I was posting the midday update, and I talked about it right there because I took the trade as while I was doing posting the midday chart. I saw this set up, and I'm like, man, I can't miss that trade, and so I took that one while I was doing the midday update, and I kind of talked about it just a little bit there. So, but anyway, really nice trade. We run up, and this was an FOMC day, announcement day, so I failed to mention that during the midday chart. Normally I'll point that out just to make sure people don't miss it, and I failed to mention it today because I was busy with this trade. But at the same time, we got a break here. Notice the break. We got to move to a new high. We make a double top. Look how we push through the EMA. We pull back. We don't get any breaks higher here, but this is very negative, and this is what a reversal pattern looks like. This would have been a definite blue if we got the breaks higher, but we didn't. And but on a smaller chart, you'd see it. And but notice we come down, we push up. That's your first entry. We pull back, you push up. That's your second entry. And if you go to a smaller chart, you'll probably see it with the breaks higher. But notice how we push through the EMA and we pull back and test it and then turn down. I like going short right there. It's a little bit aggressive because it's not a perfect setup on this chart. Notice this big bearish bar. You could have waited on a break below it and tried to put a limit order in there, but you would have missed it. This is one of those where if you're conservative, you get left behind. And look at it go. And it's tempting to enter here, but I don't think you want to. We really had a break of this right here, and we really got two legs down. But notice what happens here. You get two swings. That sets your trend line. So draw that trend line off that and wait and see what happens. And it's tempting to go long here, but there's too much overlap. There's some resistance right across there. I think it's too risky. I think you just got to sit tight. You can see that little resistance area. But look at it go. That was a great trade if you caught it, but it's not worth risking it. And you're better off to wait on the next pull down. It's generally what you call the failed second entry short. This is not a failed second entry short because look how big that move is. However, you can treat it just the same because it pulls back, it confirms the trend line. I still don't think I would have gone long there. But when this bar breaks higher and then it turns back down and we go lower first and it fails, it goes one tick lower, traps everybody to the short side, reverses. Have your buy stop sitting there, and look at that thing go. That is a beautiful. If you just caught this trade and this trade today, even with just one contract, you probably made 89 or so. Well, you'd have to get out. You could have got out on the double top. Let's just say you got 89 to 93. There's 4 points there, and there were probably something similar here, 4 or 5 points there. So just trading singles, you make 8 to 10, 9 or 10 points right there, and that's being conservative. So you don't have to have a lot of trades. So keep that in mind. But anyway, really great trade right there. And look at it go. And it pulls back. First entry pulls back, and again, this is kind of a repeat pattern. Your second entry is right there. You don't want to take that one. But when it turns down here and then turns reverses, just go along on a stop right there. And even though it doesn't go any further, it's a quick, easy scalp. There's another quick scalp. Then notice what happens. You make a double top. You shoot right through the EMA. You pull back, you test it, and it goes down. This one should be green. It's a repeat pattern. It's very similar to this one right here. It's almost a identical setup, except it's a bigger pattern. But notice you got the double top, you shoot through, you pull back and test it. You got the double top, you shoot through, you pull back and test it. So this one's even, if you recognize that this is a repeat pattern, I'd say you treat this like a regular blue trade, because and you can see it was a nice move. But if you didn't recognize that, it's a little bit aggressive. I'll still leave it green, but it is a little bit aggressive if you didn't recognize what's going on there. But it is a reversal pattern, and really on a larger chart, it's a failed second entry long that traps people. There's a little bit of overlap and congestion there, so you got to be but notice how this one closes on its lower third, this one closes in its lower third, so they're still relatively, they're not neutral bars, they're relatively bearish bars. And once we started heading lower, I would have looked for a measured move. You can see we got it almost to the tick and then pushed a little bit lower before we bounced. You can't get short down in here no matter how good that looks. You could have gone short there and it would have worked. You would have got your 4 ticks, but don't take that trade because this is where you'll get burned. And you don't really want to go long here. There's a shorter term trend line right through there. You got the break and then you low, and then look, you're going higher. And you really should always draw it both ways. This one's probably more like that right there, but you want to get this steeper move is what you want to be looking for. So it's probably more like that right there, maybe even like that one right there, because that really catches those first couple of closes off that low there. But anyway, it doesn't matter. It pulls up. You should have drawn this line right off those two, and then just move it up. And that'll give you an idea, if you've got this right, where this is going to turn down, and you drag it to that top. And look at that big bearish bar. I like this one. This is resistance all the way across here. You can see it. The red line, same thing. It's kind of a support resistance area. And look at it turn. Look how bearish that is. Right where you're expecting a trend line. And I like just put a stop there. It's a first entry, but it doesn't really matter. It pushes down, it pulls back. I don't like this one. This one's more, there's 3 or 4 bars stacked up. It's right on the EMA. You might get another leg up. This might not be, let's say you got this wrong. This is not bearish enough to go short. But then when it pulls back, when it pushes on through, and you've got 2 measured legs down and it breaks higher and fails instantly and turns down, go short right there. There is some support right here, but there's enough room to get out, but this thing just kind of takes on off. There's a second entry short here too. Um, that's a fairly bearish bar. This one really probably should be green, borderline red. I didn't mark it earlier because it's kind of in the middle. It's kind of that no man's land. But there's a trend line down there, and there's only been one. That's the first break of it. You can see that short-term trend line. It's the first break. We're probably going to test that low. So I'll give that one a green. It is off the EMA. And then we push back up here. This is, actually, I know why I didn't mark that one. It's because it got into the 12 o'clock hour, and you don't really want to trade that last hour before the FOMC news, so that's why I didn't circle that one earlier. But I'm going to leave it green anyway. But I wouldn't have taken that for that reason. I forgot about the FOMC, and that's the reason I didn't mark anything in there. It didn't really get crazy today. I mean, we just had the rate change, and we've already kind of built in all that move, and the market's really sold off, so it didn't really affect the market much. Really, by 1:30, you could have said, hey, the market's still normal. And notice what happens here. This is the first break of this trend line, and you got a new high here, pull back first entry, pull back second entry. It fails, just go short right there, and look at that move. That move right there, if you only caught that one today. And that really got you into the 2 o'clock hour, but I wanted to show this. Here's the reversal pattern from the other side again. Notice this big move down. We got a new low. We overshot the trend channel. You come up. You get a little hesitation, but then you push through, get a little more, and push, and you get a first entry short, it pulls back. You get a second entry short, it fails, and it looks like a spiking channel. I like going long right there. A quick, easy move, and you wouldn't have got any runners out of it. They came right back, stopped them out, and then off it goes. Takes off again. So I did go ahead and mark it just because it was a reversal pattern. But yeah, really good trading day. Again, I recommend from about an hour before any kind of high volatility news, which FOMC always is. Wasn't much to it today. It got a little bit volatile right there. It didn't really go anywhere, but it gave you that nice trap. And the price action, that's one thing make sure you understand that. Even during high volatility, the price action is always still valid. It's hard to read because it moves so fast sometimes, but it's still valid and it still plays out following the same rules it always does. So keep that in mind, because that you don't have to worry if you're reading it and it's moving slow enough to read, you're probably okay. Just don't, that hour before, I wouldn't fool with that, because a lot of times it just sits here and does this and you get stuck in a trade and never fails. Whichever way you're in it, that's the way it's going to jump against you. And notice what happens here. It jumps at the 1 o'clock open, doesn't go far, but it's enough to stop you out, and then it goes right where you think it's going to go. And it never fails. If you were reading all this right, you probably got shorts down through here. So they run everybody's stops, and then it goes on down. So the market's just the ES is just too efficient to try to. You cannot trick it. You cannot outplay it. You have to play it by the rules as we teach them. And if you do, you're going to be much better off. So don't try to get cute in this market. It's very predictable. Once you've watched it a while and you understand it and you understand how to read this chart and what it's telling you, it's very, very predictable. But it just takes a while to get there. So talked about that a couple of times the last 2 days. So keep that in mind. But that's pretty much it for today. So I'm going to wrap it up, call it a day. It's been a great week so far back. I hate to see the market really get beat down like this, but it's a great earning opportunity for us. All week, we don't care which way it goes in the end. We just need it to move, and as long as it's moving, we can make money. And if you hate to see it sell off for other reasons, for bigger reasons in the bigger financial reasons for our country and our nation and so forth. But I've read somewhere that Apple, I think it was Apple or somebody. I wish I'd have saved the article. I would have showed it to you real quick. But some big investor lost 8 billion in the sell-off over the last couple of days. So that's a lot of money. It's just, but the thing is, if you were day trading and going along with it, even if you only traded one contract for 1 point every day, you got some of that money, and that's all that matters. Um, some his loss is our gain, and anybody can afford to lose 8 billion in one day. He can afford to give us a few hundred or a few $1,000s out of it. So it doesn't he'll never notice it's gone. It's just paper on, for his on on his half. So anyway, I've rambled enough. It's a really good trading day, just a trading range in the end, but use those shorter term trend lines. And actually, one more thing before I wrap it up. Somebody said that their tick charts have really been out of whack compared to the volume charts lately. I still like the volume charts. I really don't see much difference in them, but if there is a big difference the last few days, it's probably the volatility. Ticks, the ticks count a little bit different than the volume, and so it's possible that they could be trading less ticks but with more volume. Maybe they're I forget how what a I forget all exactly how they determine a tick, but a tick can be multiple contracts, multiple trades within that tick, the way I understand it. Maybe not multiple trades, but multiple contracts, where volume is just a certain number of contracts. So the volatility, you may get more bars and bigger or smaller bars with the volume chart, but I don't think you get the changes quite as much as you do with the tick chart. So if your tick chart is looking really different and you don't like the way it looks, maybe try the volume. I'm still going with 6,500 volume. I like it, and it's worked really well. So I'm sticking with it. I don't see any reason to change. It gives you people always ask me, why do you go with a tick or a volume chart, but why don't you just trade a time chart? Well, if I show you a time chart, some of these, you don't see nearly as many details in the price action with a time-based chart. And so that's why I like the tick chart, because you see all these little traps and these reversals that I show you every day. You won't see a lot of that in a time-based chart, plain and simple. You may, this whole move right here, if it takes 5 minutes, it may only be one bar where you've got 4 or 5 bars and breaks higher and breaks lower and that kind of thing, where you may not have that on a 5 minute chart. So keep that in mind. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.